Bull markets, bear markets, when to buy or when to sell. These are the questions that seem to be on everyone's lips at the moment. In this video, I'm going to try to help to answer a few of those the best I can. Give and take kind of my personal opinion on the space as it stands today. As I get into this video, if you find it useful and informative, hit the like button. I really do appreciate that. If you happen to be new to the channel, why not go ahead and subscribe, tap the bell, select all notifications, and in doing so, you will be kept up to date with everything that we do here at Cheeky Crypto. If you haven't yet joined us in Discord, links in the description down below. It's a fantastic community talking crypto 24/7. It's completely free, and I don't think you'll be disappointed by what you find down there. Now, if you're looking for a little bit more from the crypto space, whether that is bear market strategies, project reviews, trading, why not check out the Patreon services as well? Okay, let's cover off a few things to kind of start with. I want to kind of just do a big shout out to all the influencers who are still active during this time of volatility. It is usually too easy for some influencers to just kind of disappear with some kind of lame excuse and essentially, not provide support to those communities. So anyone who is still doing, content right now, hats off to you guys for providing, clarity in these kind of uncertain times. And the other thing I want to kind of clear up to kind of start with here is that this is my personal thoughts and opinions. I'm not a financial advisor, do not offer financial advice. So that isn't what you're going to find here at this channel. Okay, let's get into this then. So we'll start things off by taking a bit of a look at the kind of overall market. This is obviously Bitcoin on the weekly chart, right? This is the bigger kind of scale of things. Now, obviously, I've labeled up several things here. So if we just take a look at the 2013 all-time high, essentially it was a 51,800% move from the bear market low up to that high point, which was fantastic. It was a double peak. We had an 82% crash here, so you could argue that this was a really, really mini bear market. I know how people love to say that, as soon as you kind of drop down a significant amount like that, essentially that's a bear market. So people were calling it a bear market back here as well in 2013. So, entirely up to you whether that's what you want to call it or not. Fill your boots. Essentially, we had a double peak here where we went up much, much higher. So I think one of the things that the terminology that often kind of gets confused or people kind of overlook is what actually is a bear market, what actually is a bull run, and essentially I think these are just labels, and it's actually more important to understand the structure that is inside. Now, there are the stereotypical kind of bear market structures and bull market structures, but sometimes it actually kind of gets blurry and it gets a little bit difficult to actually see. So just bear in mind that we can sometimes look at things like an 82% crash, call it a bear market, and actually then continue up into new all-time highs. Okay, just bear these things in mind. The overall structure is more important than a label of bear or bull. Okay, so obviously we had the all-time high, we then crashed down at 67%, and it was 133 days to get that 67% crash. Okay, that's an important thing just to note. Obviously, when it comes to much of the crypto space, it's really hard to kind of gauge time, right? Anyone who kind of throws out a date out there, they usually are wrong, right? There's very few scenarios where someone has predicted a specific date and they've been right about it. It's just pure luck, or they already have some kind of inside information about it. But essentially, timing the market is incredibly difficult. Very few people ever actually get it right, and it's best to not even think about it and actually just be in the kind of a range of a number, and I think you're going to be okay. So when we jump back down here for a second, 67% in 133 days. That is an important thing to note. We then obviously bounced up and fell down further, and basically we had the bear market low, which was 86% in 413 days. So as we see, as the point of this video is, what are we right now? And I'm going to get to that in a second. But essentially a 413-day bear market, if you will, from the all-time high to the all-time, well, not all-time low, but from the all-time high down to the bear market low, 413 days. So you're talking about a year and a half, right? A little bit less than that, but around about there. And it was an 86% pullback for Bitcoin. And we also have to bear in mind that particular pullback was when Bitcoin wasn't exactly worth so much money, and as a result of that, you could argue that essentially, it was easier to move down significant percentage points. Now, obviously, the other variables that are important when it comes to price are going to be supply and the demand. So, seeing a pullback of 46, if I can get my words out, 86%, essentially during that time, you would have had a significant supply increase. As mining was actually a lot easier back then. Okay, so let's talk about now. We move on from that bear market low. We go up into 2017. We see 12,800% in gains. Okay, significantly lower than what we saw over here, but this is to be expected. Okay, you would expect lower percentage gains because the price is higher. It takes a lot more to double your money, let's say from $10,000 Bitcoin to $20,000 Bitcoin, right? Very, very difficult to kind of do that. Whereas you can move from let's say $300 to $600 Bitcoin very, very quickly without actually too much money to move that needle. So what you've got here is a significant increase in price. Obviously, it goes up to $20,000 in 2017. It was a 12,000% in gains, and obviously it's significantly lower than that of the 51,000. You can argue it was 20% of that. Okay, now what we do is we can see that we had a 69% crash in 56 days, right? So 56 days, significantly lower than that of this crash over here. Okay, so basically we pull back down to a very typical number, 69 or 67%, okay? And it happens very, very quickly after the all-time highs. This is an interesting thing just to keep a mental note of. So essentially within within 2 months or within kind of 3 months, effectively what we've got here is a significant decrease in the bit price of BTC. Okay, so 69, 67, an average crash or initial crash after the all-time high is 68% on average. Okay, so really important that we understand that. Obviously, the bear market low comes in a very similar number to what we had previously. Okay, if we go from an 86% bear market low to an 84% bear market low, this time the bear market was actually shorter. It was a 364 days, so you can argue just 1 year, whereas it was over a year in the 2013, 14, 15 kind of run. So important things that we obviously have to kind of articulate. One, the first thing that we obviously have similarities over is the initial crash after the all-time high is relatively common. Here we have a 69 and here we have a 67. On average, it's a 68% crash, and it happens within 3 months of an all-time high. Then, of course, we have two very similar bear market lows, both at 86 or 84, on average 85%. It happens within probably 1 year and I'm going to say 1 month, so basically 13 months on average, but you do have a slight fluctuation between these two. You can argue that the bear markets are getting shorter, okay, and the bull runs are actually getting longer. Interesting kind of takes there. Again, there's not a huge amount of information here, and we are making a few assumptions, but essentially, after this low point of this December 2018, what do we see? We actually start to see the next bull run for Bitcoin. Now, a lot of people weren't talking about this, but that's exactly what it was. We had this very impulsive structure come up. Okay, very important that we note that. Then obviously we had the pandemic crash. This pandemic crash for BTC failed to bring down the low any lower than the bear market here. Now, this was the low for many altcoins. This was the bear market low for many, many altcoins in the space. Not all, some of them actually started at the same point as Bitcoin. So when Bitcoin had its bear market low, things like Chainlink also had its bear market low, and they actually started their bullish structures. Now, what this actually looks like to me is an impulsive structure after the bear market low. Now, of course, we can take a look at this in many, many different ways. We can take a look at the entire thing across multiple years here as a big wave one, maybe a wave two, maybe this is some kind of wave three that we're still in. Maybe this entire thing here is all a wave one and there's an absolute massive crash still to come. That actually means that there's going to be absolute colossal gains in the years and years to come. Okay, one thing that I'm very confident on is essentially that crypto is here to stay. It's not going anywhere. Bitcoin is dwindling down in supply very, very significantly, so we cannot ignore those kind of things either. So just taking a look at the entire structure across these years, it's very, very encouraging. Now, of course, what we've been tracking is this is a wave one, this is a wave two, this is a wave three. I think we're in some kind of complex wave four, and we might come down ever so slightly lower. And then we go up into a wave five, and that wave five should take us into the $100,000 range. Now, what has gone on so far, and how does it differ to previous kind of bear markets, right? So obviously people have been talking to bear markets a lot. Influencers have been disappearing because they're totally confused over what to do, and they don't necessarily want to kind of put anything out there that might be incorrect. So essentially what you're kind of left with are people like, me and Chris on the channel, a few other influencers who want to kind of support you guys and show you what we are thinking in this kind of, patterns of data. So, I want to kind of come back down to this the 67 or 69% crash, right? What have we seen? Well, we saw a 56% crash that lasted 70 days. Okay, that got us down to 28K from the all-time high of 65K. Then we went up and set a new all-time high. Now, new all-time highs they don't happen in bear markets. Okay, so we can rule out that that was a bear market at the time. So now we're talking September, November of 2021 as the all-time high. What happened afterwards? Well, we saw a 51% crash so far, and it's lasted 77 days before we bounced up to about 48k. Now we can bounce and we can of course come back down, but we'd have to come down quite significantly in order to be able to really kind of make sense of these numbers. So let me just clear this up for a second, and what I'll do is I'll just zoom in on this one section just here. Okay, we'll make this a little bit bigger. So if we got the all-time high just up here at $69,000 and we run this across to our current point, we've been going for 175 days so far. So knowing that we've been traveling here for 175 days from the all-time high, this is vastly different to what we had seen previously, where we had a 69% crash in 56 days. Again, if we actually go back a little bit further, we take the 2013, it was 133 days and we saw a 67% crash. So what am I thinking here? Well, I'm thinking that this is vastly different. It doesn't make sense that within 175 days we've only pulled back 51%. It's possible that this continues to pull back down and we can go down a little bit lower and it can take a little bit longer, but essentially this is not what I would expect from an initial kind of bear market crash within the market. Okay, I would expect that 68% on average retracement to happen within the first 3 months. It's a sharp decrease when money is flooding out of the space. So for me, this doesn't really marry up quite nicely with a bear market structure to that degree. Instead, what I think is actually going on here is probably some kind of 5-3-5 structure, or because we've got a lot of overlap here, we're actually looking at a very complex C wave going down lower. Now on the channel, I've been talking about for a very, very, very long time about a running flat correction. Now, a running flat correction is basically taking this $65,000 high, coming down with our A wave, moving up with a B wave that comes higher than the origin of our A wave, so higher than $65,000, but then crashes down, but fails to go down lower than the A wave. Okay, so by failing to go down lower than $28,000, basically makes this a running flat, and then we get the reversal. This is usually a bit of a trap and kind of catches people off guard. Alternatively, we haven't finished this C wave and we actually have an expanding flat correction that comes down a little bit lower than $28,000, probably in the range of $25,000, maybe even $22,000. Okay, and those kind of ranges are still very much valid for this corrective structure. Now, this corrective structure is an important one, it's because as I said earlier in the video, right, the entire structure is more important than necessarily the specific percentage drops that we've had. And the structure that we've got here is a big wave one coming up, okay, from the lows of 2018 up to the highs of about July 2019. We're down in March 2020 for the pandemic crash is our wave 2. We go up to $65,000. That is effectively our wave 3. We then pull back down wherever this corrective move lands. Okay, so if it does drop down lower than $28,000, that's fine. And then we go up into a fantastic wave 5 higher, and that there is the end of the bullish cycle. Okay, so essentially we've got a couple of things. We can either look at this next kind of run to the upside, this mini run to the upside, as a bull market, or we can look at it as in it's just a part of this bullish structure that we've got going on from the December 2018 lows. Now this is important because a lot of other people are kind of saying this was your high, or this was your high, and we've been in a bear market this entire time. And I get that, right? People can label things how they want, and I'm okay with that. But this is definitely a bearish phase, right? We cannot ignore that this is bearish phase, right? And that's exactly what I'm looking at this. I'm looking at this as a fantastic opportunity to scoop up some fantastic deals on altcoins. Now, the other thing to bear in mind is not all altcoins are following this pattern. Okay, this is what Bitcoin is following. We've got things like maybe Cardano following an expanding flat correction, not too dissimilar to the running flat here on BTC. But then you've got things like VeChain. VeChain's not in this structure at all. It's just corrective up, corrective down, and it will look for another corrective move going up, in my opinion. The same thing for XRP. XRP is very much in an ABC structure, currently in an Elliott wave triangle in the B wave, right inside this sweet spot here. And again, if we wanted to, we could also articulate that as maybe something that's also going on here across this time frame as well. But I don't think that's the right structure. So essentially, I'm thinking that this is definitely a bearish phase in the cycle, but the structure is still long-term bullish, and we are still, of course, looking to get that progressive highs. Now, with all that kind of being said, and a little bit of education on what I'm kind of thinking of what's going on right now, which is why I don't necessarily want to label it a bear market. We might throw the terminology out there a little bit, just so that people can kind of understand, what's going on right now. But essentially, long-term, that's not what I believe is actually going on here. Now, as we take a look at this, we obviously had the all-time high, 77 days, 51% crash, obviously 70 days, 56% crash, and it went up into new all-time highs afterwards, right, and all that kind of good stuff. So I'm not going to go into that. The other thing that's bearing in mind, right, is everyone's saying we're bear market now until the next Bitcoin halving, right? That's going to happen, I think, the 2nd of, if I can get my timing right on this, the 2nd of March 2024, right? When that was a significant time away from where we are now. Now, obviously, to be in a bear market for that entire time, you are talking about 665 days. And that wouldn't be a bear market. That would be a crypto winter. And there would not be many projects that would be able to survive that long in that kind of bearish scenario. So I don't think that's likely to be viable either. Okay, so we obviously have to run through several different ideas here. Things that are, likely and things that are not so likely. Possible, but not probable. So I wanted to start this video off just by taking a look at that. And yes, start this video off. I think this is going to be a long video, but do make sure you pay attention. I think, if you disagree, agree, let me know in the comments below with all that kind of good stuff. But now let's jump into some of the more bearish kind of scenarios. How low do we think this thing can potentially go if we were thinking like super bearish, right? So let's take a look at this as a big structure. Let's assume that the $69,000 high is the top and we are coming on down. How low can this go? So we're going to take a fib. We're going to run this up. We're going to run this across to this point here. And then we're going to grab our ABC function. We're going to run it from the top. We're going to run it down to our $32,000 low. We're going to run it up to the $48,000 that we were talking about earlier. And then you can see right down here, we do have a price label I can throw right on here at 23,000. It's actually pretty much 23,000 spot on, but I'll just adjust that to be in exactly the correct number, which is actually $23,013. And I'll just enter that. So there you go. And so that's kind of the low area that this thing potentially could go down to. However, we should also be very, very aware that we can create many different areas of support on this journey, specifically the 702. Now, for those who are familiar with either 𝗕𝗘𝗪𝗏𝗂, his channel, or what I talk about here when it comes to Bitcoin occasionally, the 702 is an area that resonates incredibly well with Bitcoin. Now, it wouldn't surprise me that this $28,000 low that we had in June of 2021 is happening to coincidentally marry up quite nicely with the 702 of a Fibonacci retracement tool, meaning that a double bottom could be very probable here and a good point for reversal. So I would expect to be, I say expect, I would be really cautious over what's going on at that particular point, because that could be a real strong bouncing area for us. Obviously, on the most recent videos for BTC that I've been talking about, I have been talking about, areas such as $32,000, and that's obviously a good area of support as well, all across this range. But also around that kind of $31,000, $30,000. I think essentially anywhere in this area is primed for a wick, in my opinion, right? We could wick down very quickly to these low points and basically just come across in this entire area here. Essentially, this is actually just north of the 618 on the fib chart, but actually just a little bit south of the 50% retracement. So basically, we could come into a double bottom, as kind of what I'm hinting at here, at $32,000. This actual wick low is 32,950, but it's also possible that we come back down to those June 2021 lows, where we actually saw $28,600 exactly according to Binance. So a wick down into this range, and it could be something that we might actually see. So just going to keep that open-minded right there, because I do think that this is a key area for us, and I think it's worth just kind of making sure that we're fully aware of absolutely everything that goes on when it comes to Bitcoin, because I'm going to get into some more data in a second as to kind of what backs up a lot of my kind of thought processes here. Let me just check this, 32,950. So again, these numbers that Binance throws out, they are scarily accurate in terms of where they actually go. Let me just get rid of some of that. I don't need that. It's cool. So that's kind of where we're looking, right? I'm thinking this is a high probable area for a bounce and reversal, and we don't necessarily going to go down, or we're not going to necessarily go down to these low ranges, but they are possible. So we should acknowledge that, you know, $23,000, it's an area that we can map out. It's just whether or not that is likely to happen. And again, you know, if we do see that, then this whole entire structure is, you know, as I was saying, the same as Cardano in that regard. It's an expanding flat correction. We pull down into those lows, we pull up to the new all-time high, and then we pull back down all the way here. It's a big kind of ABC structure, or to be more accurate, it's actually a WXY structure. But you know, nonetheless, it's a fantastic kind of way to articulate exactly what's going on there. So lots of things to kind of be thinking about in the coming days. But what does this ultimately mean, right? Because other than kind of, you know, are we in a bear market? Are we in a bull market? What do you do with this information, right? It's important that we understand that actually this is where most of your money is actually going to be made. It is going to be made down here when you get to these low ranges. So if Bitcoin does come down to, let's say, $23,000, those altcoins are as cheap as they are going to be, okay? And you want to be basically throwing as much disposable cash at those projects as possible, in my opinion. Obviously, as I said at the beginning of the video, I'm not a financial advisor. I can't give you financial advice. But what we can do is obviously talk about, you know, all the various different things that are going on and where the maximum amount of value is going to be seen. So for me, that's kind of, you know, what I want to be looking at. I want to be looking at maximum value for the maximum amount of coins I can buy with my disposable cash, right? And bear markets are really where you want to focus for that, because essentially what you're going to do is you're going to throw your cash, get huge stacks in positions, massive amount of coins, and essentially when that market really moves back up into new all-time highs, many of those altcoins will go up into new all-time highs as well. Some of the targets that we have been expecting for a very long time will finally get hit, and you would have maximized their potential, right? You're talking thousands upon thousands of percent in gains, and really that is where crypto millionaires are made. They are not made buying the green candles on the way up. They are made when you actually are analyzing and trying to figure out where the best place to buy your positions are. Okay, so essentially really you want to focus in. This is the time you want to really engage in crypto. This is a time that you really want to be in this space, learning, educating yourselves, and obviously researching projects. We often say on the channel that you cannot take one influencer's, two influencers, or three different influencers' word for it. Sometimes they are paid to talk about a specific project. Sometimes they just read a script, right? You don't know if they're being paid or not. Sometimes they don't tell you. So it's important that you do your own research. And Chris and myself, the same principle. If we bring up an altcoin that we think is a gem, go and do your own research on it. Don't just go and blindly buy it because we're talking about it. And you should apply the same logic to any other influencer in the space, whether they are on TikTok, Twitter, Facebook, YouTube, wherever. Essentially, you know, do your own research, and hopefully you'll come to the same conclusions as those guys, but sometimes you might not. Maybe the project just isn't for you, and you did the research and you were able to avoid a rug pull, a scam, a honeypot, whatever. But also in doing that research, you will obviously be able to, you know, find actual hidden gems, diamonds in the rough, and all that kind of good stuff. So really important that you do that. You can't really avoid it. It's something you just absolutely have to do. So really kind of coming back to this a second, right? So yeah, this is really where you want to be finding that maximum amount of value. Okay, it comes when the market has completely bled out and there's maximum amount of fear that you're in a bear market. Essentially, I don't think that's really a bear market. This is a bearish phase, and I think I've talked about that enough now. So let's go ahead and take a look at some additional data. So there's a lot of data on Glassnode, and you know, whether you choose to acknowledge that this is accurate or not is entirely up to you. It's hard to verify the data here, but I will just focus in on a couple of things. Okay, so the balance of Bitcoin on exchanges has been dropping down significantly since pretty much 2021. Let me just find the exact date here. So this was actually, no, sorry, March 2020. So obviously the pandemic crash, we saw an inflow of Bitcoin significantly, right? And then it basically starts to dwindle down. Now, April 2021, we saw a significant amount of inflows, but again, didn't really dent the amount that was disappearing. And again, all we've been seeing is Bitcoin leaving in 2022. Over 4 million Bitcoin has left the exchanges in 2022 alone, significantly diminishing the supply that is available to retail investors. Now, this is important, and it's important because you've got to think about strategy, right? If you are buying up a significant amount of Bitcoin. You're a whale in the space. You've accumulated thousands upon thousands of BTC. What you want to do is you want to make sure that there's a significant shortage of supply, so that when the demand kicks in, what you can actually see is a significant growth in the amount or the price of BTC. Now, essentially, a lot of people in the space misunderstand what actually creates price discovery. A lot of people think it's about market cap, or it's about the liquidity, and it simply isn't. It's actually really, really simple. It is all about supply and demand. You get those two things under control, and the price of Bitcoin is going to grow massively and almost out of control in the way that it will also pump. So with a dwindling of supply the way that it has been, and the way that it is continuing to decrease, with over 4 million leaving the exchanges, it's important that we understand that this essentially is a significant squeeze on the supply, a squeeze that hasn't been seen since 2018, which is a very long time ago. So it's important that we understand that as accumulation continues here for Bitcoin, the supply will continue to dwindle down. And as that supply dwindles down, the price will quite comfortably and very easily move back up. It wouldn't actually take a lot of money or a lot of sales of BTC to actually push the needle back to the upside in a very significant way. So when we take a look back at the data here, and we can see that Bitcoin's been dropping down so significantly, it's important that we understand that the net difference, obviously, of over 4 million Bitcoin leaving the exchanges in 2022, and obviously the bearish scenarios, which are the green, okay? So under bearish times or bearish market conditions, you see inflows for Bitcoin, and during bullish times, you see the red, which is the outflows, okay? So this is the net difference, right? More Bitcoin going on or more Bitcoin leaving. Red is indicating more Bitcoin leaving, green is more Bitcoin going on. And so essentially what you're looking at here is this huge spike in the middle. This is basically May of 2021. We're all familiar with, we go from $65,000 Bitcoin down to $28,000 Bitcoin, and there's a significant inflow of BTC at the time, okay? Actually, what are we seeing right now? As we've moved down from 65, there was a very small amount of green, as in more Bitcoin going on to the exchanges, but actually pretty much since 2022, we've seen nothing but Bitcoin leaving the exchanges. There's a little bit of green there. That was around Russia and Ukraine and the war and stuff like that, but it was very short-lived. And basically, I think that was ultimately just some people who were a little bit scared and basically wanted to kind of get their positions resolved before, anything major happens. And in fact, actually, a lot of that stuff actually happened beforehand with all the speculation of war, etc., etc. So essentially, all we're doing here is seeing, over 4 million Bitcoin leaving since 2022. It's a very significant amount. Now, where's that Bitcoin going? I've spoken about this before, but we can take a look at all those addresses that hold more than 1,000 BTC, and you can see here, spike up in February, basically 1,000 BTC per wallet or more has been significantly increasing. Slightly fluctuated at the moment as per this morning's video, and it's actually, you can see what happened back in February of 2021, right? They dumped on the market, bringing the market down, and basically just selling to retail investors for that last little push up to 65K. Essentially, they've just traded sideways, not actually doing too much, a little bit of a push in the middle here before again liquidating and then pushing back up again. So they're accumulating a lot of BTC. The same can be said for the wallets that hold more than 100 BTC. So this is less than 1,000, but more than 100. And again, you can see the same thing. Basically, all the way through January, they dump it, and then in February, bam, they pick it all back up again, and they are accumulating heavily. So we know that the whales are accumulating. We know that more Bitcoin is leaving the exchanges. We know that the exchange are at multi-year lows in terms of the amount of BTC, and all of this has a profound effect on the supply and demand metrics that does equal the price discovery of Bitcoin. So to kind of summarize everything I've been talking about today, we are definitely in a bearish structure. We have got some scenarios where we can talk about going down as low as $23,000, although I don't think they are probable. We actually have pretty good ground to think about 28K being an actual bottom because of the 702 retracement fib relationship, but also we could also look at the $32,000 range. That's a really good key area, but if we do lose that, I would expect 28K. Of course, we have the exchange data, which is absolutely remarkable to see this dwindling down the way it has been, with extreme accumulation going on, with Bitcoin leaving the exchanges at the sum of over 4 million BTC in the last 4 months. very, very significant amount of Bitcoin leaving the exchanges. Where has it been going? Well, the whales have been accumulating. This is definitely an accumulation phase or a bearish phase where the accumulation is going on. And to think about Bitcoin dropping down significantly would require quite a bit of those whales to actually dump on the market even more, which I don't think they are doing. I think they're actually looking for pockets of liquidity, which will be created from people shorting the market who believe that we're going down to those significant lows. And as a result of it, what you'll actually find is that the price will gravitate towards the liquidation points, which will actually push up the price. And as a result, the transfer again of Bitcoin from retail investors to whales will occur. Essentially, I think we're kind of getting ready and primed for a really big surge to the upside. And I wouldn't be too surprised to see everything kind of really, I guess, take off in the later part of this year, get through the summer, and come autumn, I think this is going to be up into new all-time highs in my opinion. I'm going to leave the video there. If you have found this useful and informative, hit the like button. I really do appreciate that. If you happen to be new to the channel, go ahead and subscribe, tap the bell, select all notifications, and in doing so, you will be kept up to date with everything that we do here at Cheeky Crypto. And with all that said, done and out of the way, I hope everyone has a fantastic day, and I'll catch you all in the next one.